welcome Kyle and Ian. Do you guys quickly want to introduce yourselves, maybe current roles, and then both have some great professional experience before that, but maybe some things about your prior experience that are particularly applicable to what we're talking about today?
Sure, I can kick us off. Hey, everybody. Excited to be here. Kyle Costello. My role is Vice President of Emerging Technologies at Radius Bank. We're based here in town. We're a partner of Mass Challenge, and try to stay plugged into our fintech and sort of broader startup ecosystem here in Boston and elsewhere. I've been in this role for about a year. We think about emerging tech as covering our digital platforms, right? So we're a digital bank, and think about everything from account opening to online banking to some of the cool stuff we'll get into with Harvest and other work. We think about tech as the means to the end, which is retention and engagement and deposit growth. And so it's really about developing relationships with companies that for us represent this kind of win-win partnership. Maybe they're looking to bring a product to market and need a bank partner, and certainly we're looking to continue to scale out our offering, right? Without having an engineering team in-house, if you can believe it, right? We're 150 people, 0 engineers, a couple that kind of look like engineers if you squint a little bit, but our model is entirely partnership based. So before this, I was at Eastern Bank within an incubator called Eastern Labs, helped build out some small business lending technology. Before that, at a startup, PillPack, an online pharmacy startup that went on to get acquired by Amazon. And then prior to that, an early neobank, kind of a contemporary to Bank Simple, formerly Simple got acquired by BBVA. This one was called PerkStreet Financial. And so for a decade or so, I've been kind of in acquisition, marketing, and product roles. Mostly fintech, but kind of broadly. And I think relevance to this conversation is that I've had a chance to see both sides, right? So from the kind of enterprise side as well as from the startup side, trying to get the enterprises to kind of give the attention that's deserved.
Awesome. Ian?
Great. Hey, folks. My name's Iain Kennedy. I'm the Chief Operating Officer of Harvest Savings and Wealth. So we are a digital solution providers in the financial services space, and we focus on automation of wealth and saving relationships with financial institutions, right? So we work with large and small banks, right, to deliver solutions that allow them to optimize things like account management and opening, wealth automation, which traditionally used to look like robo, if you're familiar with that space, as well as goals-based saving solutions. Prior to that, I filled a number of different roles in the digital banking and payment spaces, as well as wealth management, product management, client delivery, as well as program management. And like Kyle, had a lot of experience on both sides of the fence, right? Being both the client and the vendor in these scenarios, and so hopefully can provide some interesting perspective on the current situation that we're all confronting.
Awesome, wonderful. Okay, so we're gonna launch right into some questions that we have prepared for Kyle and Ian. For everyone who's tuned in, if you have questions at any point, if you hover on the bottom bar of your Zoom screen, there's a Q&A button. Absolutely feel free to hit that button, enter any questions you have, text-based, and we'll politely interject with Kyle and Ian and try to get your questions answered. But to kick things off, so as I mentioned before, we kind of have this spectrum going of, as a founder, you might be on the beginning of the spectrum. You have some prospective customers on the enterprise side that you started dialogues with prior to COVID-19, and now there's a bit of a pause on talking about a new deal, all the way to the end of that spectrum, which is you have a signed deal, but maybe things escalated before you really got into a comfortable place in terms of adoption on their end and implementation. So question for Kyle and for Ian, I guess for Kyle, as you're engaging with startups, which I know Radius Bank is currently doing in the current climate, and Ian as Harvest is engaging with prospective customers, newly signed customers who you're working through adoption and implementation. What are you guys seeing out there? What are the timelines of quote unquote pauses that you're getting messages back from your respective counterparties?
Sure. Yeah. So I think one of the, and this is specific to fintech and kind of fintech adjacent stuff, but a big cause for let's say some changes to the average timeline over the last month or so has been this CARES Act and the Paycheck Protection Plan, the SBA lending program to stimulate the economy that came out of that. And so, the impact for Radius is, there's some good examples of partnerships like Harvest, where we've been far enough along here to have, and we'll get maybe more into some of these details, but far enough along not to have really a meaningful impact. Also, the team that's doing the implementation work didn't really take away from, that they weren't pulled in a different direction. But I think, broadly, right, we just had this thing kind of come out of left field, and, everyone is at a full out sprint, trying to make as many loans to small businesses as possible. And I think that, that kind of cuts two ways, right? There's stuff that we didn't care so much about a quarter ago, right, that all of a sudden is super important to us, right? So things like, can we find an AI solution that helps us pull text out of a PDF, right, to make a processing flow, from 10 or 15 minutes down to 2. Right, things that basically the way we tend to run this is quarterly. We'll kind of discuss internally, look at what's out there in terms of competitive set, and kind of try to narrow in on a handful of key areas that represent opportunity for us, where we'd like to go and potentially find a partnership. And quarterly has felt pretty good for the most part. I think annual is too infrequent. And some of the stuff that was on our list for Q1, it has changed entirely, right? And then there's stuff that wasn't on our list at all that has really emerged. And so it either really accelerates or means that for us, I think there's some stuff to do in the meantime, and we'll get into some of that. But the immediate impact is we're going to have a little bit of a harder time, giving that our full attention at the moment.
Got it. So it sounds like a bit of a polarization in terms of what the priorities are. Some things are really taking off, others not so much the priority for the time being.
That's right.
Sounds good. Ian, what are you guys seeing from your end?
Yeah, I mean, I would just echo Kyle's comments about that sort of the polarization, or sort of the shift in focus from one end of the spectrum to another, right? And I think that we were engaged with one large financial institution who was looking at one of our solution sets, and I think they were very interested in and recognized the value in it. And I think they actually once COVID-19 hit, because we allow for sort of remote operation and automation, said, hey, this is now a top priority for us. And that type of, I think, sort of, I wouldn't call that a swing, right? But I would just definitely say that, to Kyle's point about sort of what a financial institution is sort of seeing value in, the sort of needle has shifted in a particular direction. I think it is around a lot of these things that are related to automation, operational efficiency, allowing remote servicing to occur. I think all of those areas are going to be very important. I think that transcends the financial services sector, right? This is not something that's specific to financial services. But I think, I would say that in the financial services space, some of these institutions, Radius being actually a great exception, I think, have really sort of struggled in the environment to go remote, right, at a variety of levels, both in terms of personnel and operations. And in some cases, they can't, right? A lot of banks still have people who are considered essential employees who need to show up at an office. So, that's been one factor. As banks sort of figure that out, they've been shifting resources, I think, into solutions that allow for the types of automations and efficiencies that they need to realize or put in place now that most of their workforce is distributed. I think in terms of the deal cycle and the timeline, certainly early stage deals were, I wouldn't say put on pause, but slowed down significantly, right? And that was mainly, I think, because of the point that people were figure out how to operate in this new environment. They needed to put those things on hold. But I think even now we're seeing people starting to come back to the table and wanting to engage and have those discussions. I think part of that is it's important to understand how your solution fits into the ecosystem right now, or I guess really more the environment and the context, and articulate that so that those early stage relationships can move forward, and those folks feel comfortable that they're going to realize the value they need out of the solution or the engagement. I think when you're talking about sort of getting into the contracting phase, again, I think, a little hiccup there, but I think usually with those scenarios, people are able, they made a buying decision, right? So they're already moving forward, unless they've pivoted, back to Kyle's point, right, away from your solution and it's no longer a strategic focus for them, which I think is rare, at least in our case. Then they're engaging, but again, things are taking longer, right? Getting all the people in the room together because you have a distributed workforce is a little bit harder. And so I'm seeing, maybe 25, 30% lag in some cases. In other cases, though, we are seeing the type of acceleration I mentioned. And then in terms of projects, I actually think that those are continuing apace, right? You did have the bump, right, the hiccup at the beginning, but projects have really moved forward relatively quickly. I think partly because it's interesting. I think people are focusing on their roles and their work in a way that's a little bit different in this environment. I think it's a place for all of us to be comfortable and focus, right? And so, I think both maybe on the vendor and the client side, you're seeing maybe a little bit of an increase in productivity in certain areas as people work to get things done and out the door. And I think there's a variety of motivations at an individual and enterprise level for that. Which I maybe won't get into, but I think that it's, I think people really want to, invest themselves in their work at the moment rather than maybe, reading the news every day. So.
Got it. And Kyle and Ian, you both touched earlier on, there's of course a partnership between Radius and Harvest right now that started before the escalation of everything. It sounds like that everything is moving along quite well relative to some other, partnerships in the ecosystem. What were some of the attributes of that partnership that allowed for it to continue so well in the last several weeks, again, relative to some other partnerships that might have been paused or delayed?
Yeah. So I think there's kind of two dimensions there. I think one is strategic and the other is technical. So strategy wise, I think Ian said it nicely, we made a buying decision. And, one of the things that's front of mind for us right now is on the heels of this, lending program, the volume for us will be such that there'll be some fee revenue for us, but that's not the long game, right? We'd like to demonstrate some value here to folks who are borrowing money as part of the program, and ultimately, make a case that maybe we should have their deposit relationship, right? So kind of using it as a way to say, hey, we're committed here, and be helpful, right? And so I think I mentioned at the top of this the retention and the engagement piece, but something like Harvest product, right, which just for quick context, right, sits within our existing mobile and online banking platform and lets customers intelligently save for goals, right? So I've got a vacation coming up next year, or I want to buy a new iPhone in 6 months, or I want to, save that down payment for a house of 20 grand or whatever it might be over the next 18 months. You can either do that automatically. You can either do that, at amounts that you specify, or some AI will come in and recommend, hey, you get paid on this day, but your bills don't come out until this day. We're going to initiate some savings transfers here. And so strategically, it's something that we've already decided is important, and hard to see how this changes that, right? If anything, we're going to have more prospective customers who are interested in our products, and the more that we can strengthen those products, the more compelling I think the case is. And then, so that's sort of the strategic piece. And then the technical piece is, I mentioned this slightly a minute ago, but like the resources that are working on integrating this actually aren't pulled in a different direction at the moment. So since we've got sort of our core Radius team, we've also got a partner who's helped build out mobile and online banking for us, this company called Narmi out of New York. And so Goalkeeper integrates within that platform, right? So and fortunately, they're not pulled in a different direction, right? So that work has continued. and we've managed to kind of continue shepherding along internally as kind of the connective tissue, right? But yeah, so I think that's probably the answer to why hasn't this gone sideways. We still think it's important, and fortunately, the folks doing the technical work can still be doing it.
Makes sense. Ian, anything to add?
I think it's also, being partners who are used to working in a certain context, right? And I think that's key. And I sort of mentioned the challenge that some, traditional financial institutions have in pivoting in this environment. And I think that the uncertainty around that has created some slowdown, right? I think, fortunately, Radius is a relatively nimble organization, and obviously, that's reflected in how they operate. And so that's been an advantage, I would say. But even so, I think that people are adjusting to the new normal relatively quickly. And a lot of banks are starting to become more flexible in their approach. And I think that, so net, I think in terms of how, institutions are engaging with vendors, I think that it's working relatively well. I think that the biggest risk is probably situations in which your product is no longer part of the strategic focus, right? And that's a very difficult hurdle to overcome as a vendor. And so that gets into, thinking about how you're reframing your value proposition to the institution in order to move things forward. So.
Of course. So we have some questions coming in from the group. For anyone who's entered a question so far, we're going to get to those in just a moment. I'm just going to push ahead with a few more pre-planned questions that we had. So covered a little bit, sort of end of spectrum. There's a partnership in place, implementation, and things moving forward. Going back staying on that end of the spectrum, I think that we all spoke as a group on our prep call about what it means to be a good quote unquote partner in the current climate. So for you both, Ian and Kyle, can a startup be a good partner in ways that at least get some level of adoption going on the enterprise side, some level of use of the product, so that they're maintaining some level of momentum on their way towards full-scale implementation when things normalize, when priorities normalize. So what are some of the actions that a founder can take to be a good partner and demonstrate that they're a good partner, and hopefully capture a little bit of momentum, if not be right on the top of the list once everything normalizes a bit?
Happy to jump in.
Yeah. Kyle, you want to go? Right? Go ahead.
Yeah. I'll get us started. So I think two things. I think one is, and I'm sure a version of this applies to all industries, not just fintech and financial services, but diligence, right? I think it's a thing that gets folks hung up sometimes as a partnership moves from for sort of conceptual, hey, this is going to be cool, through into kind of a review process, right? And so for banks, we really care about your SOC 2 Type 2s and your certificates of insurance and all that kind of stuff that makes sure that you're operating and kind of doing what we need you to do in terms of third-party risk. And so if you haven't gotten there yet, could be a great chance to go and wrap some of that stuff up. I think that's a very tangible example of something that you could go off and do today, and it's going to benefit not just you in that partnership, but you across all of the partnerships you're exploring. So I think that's one piece. I think the other is, remember what you bring to the table, right? So if you're on my side of this thing, to the extent that there's sides, right? But if I've got a problem, and I think of startups as being an interesting potential solution to that problem because they're nimble, they're not bloated by the bureaucracy that can exist in established institutions, and have a very specific solution to a problem, and also happen to be parts of communities like Mass Challenge and Venture Lane and a bunch of other stuff, right? That mean that they might be able to provide value beyond even their particular product, right? And so I've had conversations over the last week or so about, actually the same PDF example that I mentioned a minute ago. Hey, I'm looking for this thing, right? And this is to folks that I don't think do this at all, right? But they're kind of adjacent, or they've gone through some accelerators with folks that may know someone who knows someone. And so I'd say, sort of specific tactical thing, go figure out the docs that you need. And your enterprise partner can help you here. Hey, when we get to this step of the process, what am I going to need to give you guys? I get that question twice a month, right? And I'll give our list of vendor review documentation. It's nothing proprietary. It's like, it's every bank's going to need it, and you're going to need to know it as a startup founder. And then, I'd say like play the long game of how can I help this person, because ultimately that's what it's all about to me, is like, if we can continue to invest in personal relationships, and provided, to Ian's point, the strategy doesn't do a total 180, right? At that point, no amount of somebody really liking you as a potential partner is gonna help much. Yeah, I think you're uniquely situated to provide some value here. And there's a lot of cool startups doing a lot of cool stuff that remains attractive to enterprise. It's just, how do you leverage that if I can't say yes to your product, launching today?
Makes sense. Ian, anything to add about being a good partner to the enterprise at this time?
I think the point about getting your house in order is, taking the opportunity now. And I think there's a question about, new fears slowing down decision making, right? And I think that it may not be a new fear, but I think that you want to be hyper focused on your due diligence packages and how you approach them and what you do there to ensure that, especially if you're in the sales phase of the relationship, right, early in the engagement, that you're able to glide through especially with financial institutions, because it is such a focus. And ensuring that you're also sort of reacting to the new environment and checking those boxes as well in terms of that due diligence, right? And maybe talking to how you operate in this world versus when, you and your colleagues were all, working in a shared location, or, operating according to a different model. So I think that's really important. I think the other piece on the other side of it, sort of later in the engagement, is getting your delivery model ironed out, right? So, making sure that you minimize the amount of work that you need your client partner to do to launch your solution, right? That's going to make you more valuable to them. It's going to accelerate time to market and delivery. It's going to allow your product to get out there faster. So the better prepared you are, and the more prep you put into that in this window from a delivery perspective, I think the better off you're going to be in terms of it, providing some value and momentum in the context of the engagement, right? And this includes, are there things that you can do that you normally would push off to your client, right? Are there ways that you can, augment your client's resources, right? To Kyle's point, so that, they're not, solely responsible for things. So putting together playbooks or, marketing white papers and those types of things. And it's really going to depend on how your product is positioned. And I think that particular point transcends the financial services and fintech space. But I think you want to look into, what are the biggest points of friction for solution adoption by your clients and perhaps their clients as well, right? Depending on what the relationship is there. And ensure that you're addressing those and knocking them down while you have the window to do that. Because as things pick up, right, sometimes those are the things that are, I don't want to say get short shrift, right, but those are sometimes the things that don't get the adequate focus that they require. So you have an opportunity here now to address them, right?
Makes sense.
I'll just jump in and say that's actually something that's happened specific to this partnership, right? We've got resources that have been affected more than others, and one of the groups that's been really impacted is our marketing group, right? They've got a bunch of client communications around what the status of your loan is and things like that, and that's meant that we haven't been able to necessarily give all the attention that some of the product marketing around the Goalkeeper launch is kind of needed. And so Jen on the Harvest team, I think she might be listening, jumped in and put together a bunch of kind of product marketing playbook stuff there, right? And we'll use probably 90% of it, and it's something that we really appreciate, not having to go think about and also probably accelerates launch, right? So it's not just it's kind of a win-win.
Sure. So pretty relevant question coming in from the group, still on the topic of buying. Could you both talk about how and if buying decisions or committees, investment committees, changed in the new environment? Besides harder to get people in the room and maybe a shift in some strategies, are there new fears slowing down decision making? So Kyle, might be more of a question for you, but I'm sure Ian, you have some insights too.
Yeah. I don't think meaningful. I don't think there's been a meaningful impact yet. I think, and that's specific to Radius, right? If I kind of look broadly and kind of fill in the gaps a little, I could see a shift more towards more kind of a defensive play as opposed to taking the moonshots, right? Do you have an organization that's willing to bet its future on something that looks a little risky? I think naturally you're just going to see a shift kind of toward moderation from some of that stuff. I think the other piece is, and I'm trying to make sure this applies beyond just financial services, but a lot of the startups doing stuff today are doing stuff in kind of this digital space, right? It's rare that you see innovation in the I don't know, brick and mortar retail banking game, although maybe there's some stuff there. And so I think the broader backdrop to this is, I think, accelerating digital transformation. And so, I think that's all going to continue to be important and possibly get even more important as people realize, building more branches is not the way of the future.
Yep, makes sense. And then, yeah, go ahead.
Sorry. Well, I would just say that, I think that's a pattern. The last time we went through this, and not everybody did go through this, right? Which I have to recognize at this point in my life. But back in 2008, 2009, I was involved with a digital banking startup called Foundry at that point, right? Mobile banking provider, and that the shift in, I think, focus and who you were dealing with between, say, maybe 2008 and 2010 was interesting, right? It was more of a gradual shift, but you went from, I think, being engaged with maybe like the CMO or somebody who was hyper-focused on digital transformation to digital becoming a core part of a bank's operations and engaging with a different cast of characters, right? So, somebody who might be head of banking operations would really come in and be much more heavily involved in the engagement than they had been up to that point. And, so I think, what you could see, and I think this will take longer to shake out, is some shifts in sponsorship of engagements, right? Where, to Kyle's point, the makeup of the bank is going to change. And I think that, this will be a transformative event. I actually think that this is, unlike 2008 and 2009, which was really something that heavily impacted the financial services space, I think this is going to be a much broader sort of economic transformation that we go through, right? Where I think patterns and models will shift across multiple industries, right? I mean, think about the restaurant industry, right? It's been decimated by this. So I think that, digital transformation is really going to be accelerated. And I think it's going to become even more of a core focus for a lot of institutions across economic sectors, right? And so I think all of us being prepared to respond to that in a constructive way is going to be really critical, and recognizing that we're going to see different people walking in the room, right? It might not be a head of technology. It's now maybe going to be the COO or the CEO sponsoring the program or the project, and very interested in it in a way that they may not have been before because they were focused on their core operations. Well, now digital is your core operation because that's the only way you can operate in this environment. So.
Sure. Applicable question from the group there. In regards to the strategic shifts in priorities you discussed, are the majority of these shifts geared towards enabling efficient remote work or improving the customer experience and weathering the current storm?
Yeah, I mean, I can maybe take that. I think, I think it's both, honestly. I think that everyone always wants to focus on their customers and, provide a better customer experience, right? I think though that there is a dimension of this that involves the shift to remote work and how we all accommodate that. So I think I think that probably the initial wave was to my earlier points about, okay, well, how do I operate in this environment, right? I just need to be able to keep the lights on, frankly, in a lot of respects, right? And I think most organizations have successfully pivoted, right? And I think we haven't really across our client base seen anybody who's failed at that, right? I think there are some industries that have structural headwinds where it's a challenge, but I think where you have the opportunity to shift to remote work and do those things, that was your priority and focus. And now they're coming out the other side of that and thinking about how do these experiences, how do I deliver the same quality of experience and type of experience to my customers that I was able to previously. And I think that's all about digital transformation, as we were saying. So.
Yeah. Kyle,
yeah, I think it's exactly right. No, I think it's been a really quick shift up the kind of organizational hierarchy of needs, right? From I physically don't have enough hard tokens or laptops or whatever it may be to get all my folks working, to hey, how do I solve for kind of our top UX problems or whatever it might be, right? Back to the kind of UX or customer service orientation. And some of that stuff's changed too, right? We've seen a lot more phone volume recently. And so how do we make sure that's a good experience? So some of it relates back to, the kind of the low level stuff, but I think Ian's exactly right.
Sure. And then Kyle, kind of expanding on that point, something that we talked about earlier on was the fact that Radius is still continuing to engage with startups on different strategic initiatives and kind of seeing what's out there. I think you mentioned there's a YC company that you might be engaged with. What is it about those early stage tech companies that makes them interesting or a strategic fit to Radius right now? Is it new acute pain for Radius in the current climate? Is it specific to their product? Is it the way that they engaged Radius? Is there any learning there that founders can take away?
Yeah, a couple of things. So it is a YC company that's helping with verification of business information as part of our onboarding, right? And so, as you might expect, that just got a whole lot more important for us. And so part of it, I think, to your options there, it was, yes, like solves a pain point that just got pretty acute, but we were also working with them in kind of a smaller, less mission critical kind of pilot way for a period of time, more around, how do we increase efficiency as the team's reviewing some of this stuff? If we can get an answer back from them, as opposed to going out and needing to dig around for 15 minutes doing some business research, that was a win. But I think the way they came to us was really interesting too, right? So basically, COVID hit, stimulus money finally started coming out, and they came to us, and it wasn't a cold conversation because we had an existing relationship, but they said, hey, we are gonna cut our pricing to cost, right? We're rather than pay, I don't know, several dollars per check, it's like a fraction of that. And so we went from being maybe somewhat hesitant to go off and invest all this money, although probably would have been the right decision anyway, to wow, what sort of a win for us. Helps solve a really active kind of pain point. Earns them a whole lot of goodwill in a really meaningful way. And I think it's probably 70% of the folks that are using that product at cost are going to go on to sign a 3-year contract or whatever it might be. Not only because they've realized the product demonstrates value, but also, because they reached out at this moment of really acute need. And so, I think if you fall into that category, it's great, right? And that's what you should definitely go do. And I've seen there's another Mass Challenge company that's been doing some similar stuff. Boss Insights, I believe, right? I've seen some writing about, hey, we're gonna cut costs or whatever it might be to get this out to as many people as possible. So I think it's a good strategy. I think it works best if you're in kind of fits into that mission critical product category. I don't know exactly what the alternative would be in a case where it's like a nice to have, but maybe it gets back to some of the answers around, can you be useful in other ways for a period of time and kind of invest in the relationship.
Sure. Ian, anything to add there from the perspective of Harvest? Similar strategies, figuring out what's mission critical, opting more for adoption rather than maybe higher pricing in the near term, or anything else that's been particularly effective for Harvest in terms of the messaging and the outreach and the prospecting for new prospective customers.
I mean, I think Kyle hit on a lot of the main points. I think, I do think that your approach to the market's going to have to shift in this environment, right? And I think that, there's cycles of forbearance happening everywhere in the economy right now, right? And I think that you're going to need to look critically at your pricing structure, especially maybe if you're on a little bit of the periphery of the prioritization of the bank, right? And say, is there a way that I can come back to my client partner, right, and maybe make some concessions up front in terms of the structure of the engagement or the pricing, so that I can, they can engage, right, and I can form that relationship, and then I think reap that goodwill, right, and then come back, and really I think be primed for success on the other side, right? Which is that you've got a stable of customers who have adopted your solution and understand its value. It maybe isn't their core focus at the moment, but you've given them an opportunity to engage with you, and engage with your product, which means that as things settle down, right, you'll be better positioned relative to maybe just holding tight, right? Because that is I think a difficult analysis to do as a based on the current situation, right? I think anticipating where we go, even in the medium term right now is a hard analysis, right? And I think being engaged and having clients and having customers and having a sales pipeline that's healthy is going to be the best thing for really any organization, but startups in particular, right? We live and die by those things. And so, I think that Kyle is spot on in his point of view there.
Makes sense. Two more questions from the group. What would you say are the top 1 or 2 priorities for financial institutions during these times? Wide-ranging question. Kyle and Nina, if you have a response.
Yeah, I do. It is Paycheck Protection Plan applications and Paycheck Protection Plan forgiveness are the two, right? One is about to turn on probably tomorrow as our guest. We'll get an extra $200 to $300 billion in funds from Congress, making sure we were lucky enough to have an existing partner, separate existing partner, who were able to go to literally 4 days before product launch, before the program turned on, and said, can you guys help us with this, right? We see a lot of opportunity here and we need help quickly. And they said yes. And we launched 4:30 or 5 a.m. Sunday morning after an all-night sort of release testing session and all that. And so we're fortunate to have that in place. I think forgiveness is the next thing that's going to come up. And this is, how do you let applicants who got a loan upload their documentation to say, hey, I spent it on the right stuff, I meet the requirements, this needs to be forgiven, as opposed to funds that I need to pay back. And so, very specific to financial services, obviously, and very specific even to SBA banks. But if I had to make a list, those are definitely the two at the top at the moment.
Yeah.
Third I'll say is goals-based savings. Goals-based savings, a nod to my friend Ian here and Harvest.
A little plug. Right. Yeah, I think, and I would say that, we're seeing that pattern everywhere. You walk into any meeting and it's what's been going on, and it's Paycheck Protection Act, right? And what has been their focus for really the last 3 weeks. That's been the core of it. And I think that's going to continue to sort of cycle through things. I mean, I think, I think even candidly, I think, well, the servicing component is unique to the financial services industry. I think, that program is going to touch a wide variety of businesses, right? And so I think everybody should keep that in mind, right? Because I think that, again, getting back to sort of the breadth of what we're going through right now, I think that, nearly every business, it seems like, is applied, right? Whether or not you even necessarily needed the funds, right? But it is going to be something, I think, that's going to continue to be, I think, a major focus for banks. And then I think, beyond that, I think it is, I think you do have to look at sort of the shifts in, especially if you have a solution maybe like ours, right, to pick up the plug from Kyle, where, I think that consumer behaviors, especially in the financial services space, may shift for a period of time here, right? You got to look at what those shifts are going to look like. I mentioned forbearance, right? I mentioned, sort of the behavior that consumers are exhibiting, right, as it relates to their financial lives. And so, how do you ensure that your product now fits the new reality in a way that allows it to continue to have a lot of utility in the marketplace? Because I think we went from equities market that was just on fire, right, to one that's really struggling, right? Hopefully you're not in the oil and commodities business right now, right? But that's another area that has some headwinds. And so, are there other ways that your solution can be applied or reframed, and the context in which they're framed is going to be really important? Because I do think that if you can identify ways that your solution is going to add value to new patterns in consumer behavior and get in front of those patterns, right, or to the extent that you can, you're going to be really well positioned. And I think, it may be a few months or even years before those patterns reveal themselves, but if you're starting to analyze the world now and look at what's going on, I think you can hopefully get ahead of them, right, and identify those things that will be top priorities, maybe not today, Paycheck Protection Act, but 3, 4, 5, 6 months out from now, when things have sort of, reached a new level, right?
Yeah. All right, so we're coming up on 12:45. Sounds like to sum everything up, and please, Kyle and Ian, if I'm leaving out some big points, please interject. But it sounds like you both observed sort of a polarization in priorities and acute pain on the enterprise side, and really some of the best advice right now is understand the polarization. And on the side of what is still acute or newly acute, does your product, does your service currently solve that pain, or can your product or service be reframed in some way to help address that acute pain? And then in terms of the dialogue, the messaging, the engagement, being a good partner, erring on the side of let's get these tools into your hands now so that you can do some good for your customer base, and do more with less. And in terms of the harder terms, the pricing and revenue and those sorts of things, that can be figured out later on down the line. Anything you would add there, big points that you take away from the last 45 minutes?
I think you covered it pretty well. I think, if you're not sure what those pain points are, right, talk to your folks on the enterprise side, right? I don't know that I could give anybody 2 hours at the moment, but quick 15-minute thing of like, hey, here's killing us right now, right? Might help you reframe or think about how you might be able to provide value, whether it's reframing your existing product or saying, hey, go talk to these folks that I know from Mass Challenge or Venture Lane or whatever it might have been.
Yeah. Ian, anything to add?
No, I mean, I think the only thing that I would add is that especially early on in the engagement, just recognize that there is some distraction that's short term, right? And I think you got to be respectful of your clients in that scenario, and recognize that they have some immediate priorities, and they will come back to you, right, if you fit. And so recognizing that and sitting tight for a week or two when somebody's trying to figure it out, right, is probably the best thing you can do in the short term, in terms of your sales cycle and your prospecting, and sort of early engagement, I guess I would say. So
makes sense. All right, I'm just going to take over the screen for one quick moment for everyone who is still tuned in. Apologies for the shuffling there. If it's helpful to you, we have a few other webinars coming up this week and next. Feel free to take a screenshot here because it's a busy slide. This Thursday, we have the next installment of our Fighting Bulls series. Christian Mogul, founder of Venture Lane, and Brian Denenberg, managing partner at Agile Sales Method, will be interviewing Joe Herkin, CEO of Issue. And the idea behind this series is to get in front of some founder CEOs of early stage technology companies who are finding some success navigating the current climate. Coming up next week, we have actually a topic that we touched on today in this conversation: upgrading your product marketing to replace, quote unquote, replace in-person sales. So we'll have Brian Malisic, co-founder and chief marketing product officer of Worthright, also in the current Techstars Boston program right now, talking about how to optimize product marketing materials when there's a lot of in-person and direct sales activity that simply just can't happen in the current climate. And then the next day after that, how to secure angel funding when a recession hits. I'm really fortunate to have Christopher Mirabile, Senior Managing Director of Launchpad Venture Group, wonderful angel group here in Boston. And he'll be talking about sort of what he's seeing in the angel community. We sort of know how large mega VC funds have been affected. They're still closing rounds. And some of the smaller VCs still deploying capital. So we'll hear from Christopher what his take is on the current angel activity. So thank you, Kyle. Thank you, Ian, for being gracious with your time today. I know you both have plenty going on your end, but thanks for your insights. Thanks for joining, and thank you everyone for tuning in. And we'll see you all again soon.
Awesome. Thanks, everybody.
See ya. And thank you again, of course, to Shane and Luke and team, Mass Challenge FinTech, for helping us put together this webinar for today. And to everyone, have a wonderful rest of the afternoon. Thanks.